What is up, fuckers? Welcome back to another trade recap. I believe this is number 7, if I'm not wrong. Today we're going to be going over the trade recap of September 11, 2023. Today I just want to make a quick announcement that this is basically 9/11. Okay. I just want to give a quick prayer and a moment of silence to the ones that have died on this very tragic day. So let's give him a moment of silence, please. Okay. So let's get into it, yeah? So first off, we had our analysis yesterday. Put my headphones on real quick. Our analysis yesterday, we talked about how we wanted to see price kind of come into this consequent encroachment and get rejected off of here and come back to this swing low. Did we get this today? No, we did not. We actually got a very bullish move up, and I actually believe that I might know why we did this. I always think that, if we look, let me load up news real quick. I always think that if we have big news like CPI that has a huge effect on the daily, I always think that the people that are running the market, like big industries, know the CPI data already. And they know that if they buy all the way up here and CPI comes out, it's just going to plummet all the way down to the swing low. So they're just making the market go up so it can liquidate all of the liquidity void up here, so it can then come all the way back down to this swing low, fair value gap, and market structure shift, and even lower. That's what I think personally is happening with this bullish candle. It's gonna keep going bullish. What the fuck is going on? It's gonna keep going on bullish, and then it's gonna consolidate a little bit, and then we're gonna have CPI, we're gonna have PPI, and we're gonna have I believe on Friday we're gonna have manufacturing goods or some shit like that. So that's the daily candle. So far, as you can see, we have respected this fair value gap. We have wicked above it. I believe we have taken some liquidity here, if I'm not wrong. We have wicked above it. We have traded above it, but we have closed basically, I want to say under it's, we've closed above it. So that shows a very bullish sign that tomorrow we will use this order block that I've marked out on the 4-hour to push our way up into this next order block. So let's jump down to the 4-hour. Let's check out what's going on. Yeah. There's a lot of things to cover. As you guys can know, I have noted our sell side down here that we would be targeting. This we didn't target today. Today, what we did target was this 4-hour order block that we have marked out here before this huge daily move down. What happened? This right here is a consequent encroachment. My bad. Today on Monday, let's jump down to the 1-hour. I prefer this time frame a little better. We have our daily open down here. It is important to mark these every day just to know where it is. We have our London open down here at 3 a.m. Just to know, daily open opens, right, 12 a.m. We get a huge push, again, above these old highs. Boom, old highs. This should also be targeted as buy-side liquidity. We have swept through it. And we actually use it to come back up here. This is what I've noticed too. But yeah, we push above this. Basically a market structure shift in my eyes. We can even mark this as a market structure shift. Let's just do this real quick. Market structure shift. Boom. So now we know that price is going to be bullish. But here's the thing. My bias was bearish. So I wanted to take a bearish trade. So in my eyes now, I'm looking for PD arrays and confluence that will make price come back down where I can take a bearish trade. And now how do I do that? I marked out this 4-hour order block yesterday, right? And we have noticed that price comes into here, and on the 1-hour it respects it. Then London opens, it respects. It creates sell side liquidity down here, as you can see with these lows. Comes above it, kind of trades between this order block and consequent encroachment. As you can see, price kind of trades above, back and forth. And then you get near the 9:30 open, and then you get 8 a.m., 8:30, and then 9, and then 9:30 is this big selling candle. And I took a trade on this selling candle, and I will tell you why. Let's hop down to the 3-minute. Just to let you guys know, this blue line right here is our top of the daily fair value gap. As you can see, we have price above it. This might not be correct, like where this blue line is, but the area around it, right? I always think of it like this, right? You just do like a little area around it. So this whole area around this blue line is confluence, right? So this line is not perfectly exactly, but price is going to react around this area. Just think of it like that. So that's exactly what happened here. Price shot up, and you have to remember there is an order block here that it's playing with. It's obviously not only rejecting these highs at first, right? And it's also rejecting this order block, as you can see here, which means that our confluence is correct. And it's then using the consequence encroachment as support to shoot back up, trade inside this fair value gap. Again, this is all pre-market, to trade inside this order block, to then bounce out in at the 9:30 open. 9:30 open, we trade out of it. Now here's the problem, okay? And this is where you need to be you need to be watching price action, because the problem is we respect an order block, a bearish one. So basically price should be rejecting it. But if price doesn't reject it and it comes above it, or it trades above it, or it trades through it, which it has in this case, right? It has traded from here all the way through it, right? Now what will happen is that we trade above it right here. But the problem is this is the 9:30 opening. So we have a bullish candle. We're not just going to go and trade all the way, because my quote is, you can't go higher until you go lower, right? Because this pre-market hasn't gotten any liquidity to trade higher. So it needs to come down and grab this liquidity void to then trade higher, and to actually trade above this order block, which is now theoretically from ICT is now a breaker block. Okay, so this is now a breaker block that we are trading. Apart from this, the confirmation of my trade was not only this reversal, knowing that we needed to go lower to trade higher. It was also this, I think it was a 1 minute, if I'm not wrong. I don't know why I'm on the, I don't know why I'm on the, wait, 1 minute. Why is it showing me the 1 month? It was this 1 minute, 1 minute and 3 minute breaker structure. We also go to a QQQ. As you can see, QQQ on the 15-minute, we have this 15-minute, or actually it's a 1 hour fair value gap, my bad. But on the 15-minute, this is where you can see the wick quite literally perfectly. This is also the wick from SPX right here. QQQ, you see the wick doesn't even come close to the actual fair value gap top. Gets rejected immediately. Even if you go down to the 3 minute, you can see how perfectly it rejected this doji candle. So the moment I saw this, I had the two charts up at the same time. The moment I saw futures do this, I knew that SPX would follow and it would come down to here. Now, obviously, QQQ didn't target any liquidity. All it did was target these highs down here, and I guess this pre-market fair value gap that it had here. Oops. Just pre-market fair value gap just here. So not too much confluence for QQQ, but that's not exactly where I wanted to target. This is where I wanted to target with sell side. Looking at NQ2, you can see NQ for the NASDAQ minis. You can see that we had a 1 hour, no, this is a daily order block. So this gray area is a daily order block. So we're inside this. Might not even need it, to be honest, because this is big. We just have a order block in here for this bullish candle right here that we have interacted with. And then on the 3 minute, if you look carefully, If you draw the OT from the top to the bottom of the order block, you can see that price got near the 0.705 reversal, I guess, tick or bar line, whatever you want to call it. Got close and obviously rejected off there, targeted some sell side down here and old highs, right? So that was NQ. If you look at ES, again, same thing, order block. We were just playing with order blocks today. Today was order block Monday. Big order block, as you can see here. Obviously, I would like to see, just this being traded, right? The candle, just the body of it, body of the candle being traded as it did, right? If we just mark the body, right, just the body order block, it still was traded. Look at this. I mean, if that doesn't tell you confirmation, I don't know what does, right? If this doesn't tell you confirmation, I don't know what does. Look at ES. Look at this 9:30 open. Boom. Next, boom, doesn't even get in. Rejects, break of structure, comes down. Well, my bad. Comes down, comes back up, break of structure, enter off here, target sell side. You have a beautiful on ES. If you took this on ES, you would have, you enter off the break of structure, you target old highs or the recent high. Go for, I don't know, the sell side down here. Boom. That is a 7-to-1 or 7-to-2, my bad. 7-to-2 risk reward. I'm not gonna lie, that's pretty good. 7-to-3. It's pretty good risk to reward, pretty good for a trade, especially on futures. As you can see, price didn't even come back to break even or anything like that. DXY, same thing. We are very bearish, so that means we're very bullish, which is when I noticed, right, on DXY, even though we were bearish, we still had some bullish momentum, which gave us this bearish move down on SPX. We can look at the bonds. We don't really need to, not super important. Yeah, but that was our trade for SPX. Again, you can trade two ways today, right? For example, you could have traded this down move. Let me hop off here. Let me do 5 minutes. You could have traded this down move, right? This is completely normal. You could have traded this. And if you did, that's great. You could also traded this, right? Because it hit the sell side very aggressively, right? There was probably an order block here that I missed somewhere that I could find. Obviously hit this because, if it would have hit it perfectly like this. Oh, yeah, targeted. Where did it want to target? I guess this order block. This order block that is now being traded. Oh, not even. Because it's this top wick, which is an order block, I guess, on the lower time frame. So this, as you can see, if this was an order block, this is now a breaker block. Because it was an order block, it got traded as an order block, and then it got traded through and was used as support to keep price coming up, and now it's being tested again. And this is where you could have entered not only off the sell side liquidity sweep and sell side liquidity void, but also as a breaker block entry. So there was two beautiful setups, and not only could you could have entered here, tight stop, right? Stop is like right there, super tight spot, and literally targeted these highs up here, and that would have been quite literally a 2-to-9 risk to reward ratio, even better than the puts. That would have been an amazing trade. Would you have done it? I don't know, because there's a lot of fair value gaps here. There's a lot of liquidity. I just like to trade more bearish than bullish, but you do your trade. I do my trades. We all have a good day. I hope you guys had a fantastic day today. I hope you guys will have a fantastic day tomorrow. And I will see you guys very soon. Don't forget to check out my TikTok. If you're still with me, go check out my TikTok. Go like it up. Go share it. And then go like and subscribe to my YouTube videos. It helps a lot. Please comment anything you guys want to learn, anything you guys want to know, anything you guys want notes about. let me know. Thank you, and I'll see you guys very soon.